Marcus Chen woke up on a Tuesday morning like any other Tuesday morning. Coffee, phone, bank app. He was checking his balance before heading to work. His account had $31,000 in it, money he had saved over 3 years working as a contractor in New Jersey. But on that Tuesday morning, the balance showed zero. His account had been frozen. No phone call, no email, no explanation. Just zero. Marcus called the bank. He was told, "We cannot discuss the details of your account restriction." He called again. Same answer. He went to the branch. They turned him away. For 11 days, Marcus could not access his money, could not pay his rent, could not pay his employees. He had done nothing wrong. But the algorithm had decided that he looked suspicious, and the bank that made that decision was the same bank that had just been caught helping drug cartels launder $670 million.
October 10th, 2024. A federal courtroom in Newark, New Jersey. And for the first time in American history, a major bank operating on United States soil stood before a federal judge and said 2 words: guilty. Not, "We have reached a settlement." Not, "We neither admit nor deny wrongdoing." Guilty. TD Bank, one of the 10 largest banks in North America, pleaded guilty to money laundering conspiracy. The penalty? $3.09 billion. The largest financial crime penalty ever imposed on a bank under the Bank Secrecy Act. But here's the part the headlines missed. That guilty plea did not make the system safer. It made the system hungrier. And the people it is feeding on now are people like Marcus, people like you. Before we get into what happened inside TD Bank, you need to feel the scale of this institution. TD Bank was founded in Canada in 1855. In the United States, it operates over 1,100 branches from Maine to Florida. $1.9 trillion in global assets, the 7th largest bank in North America. For tens of millions of Americans, TD Bank is where their paycheck lands, where their mortgage payment goes, where their savings sit. This is not an offshore shell company. This is a bank that probably has a branch within 5 miles of where you are sitting right now. And for years, right inside its doors, 3 criminal networks were doing their laundry. To understand what TD Bank allowed, you need to understand how money laundering actually works, because most people picture it wrong. They imagine a criminal walking into a bank with a briefcase full of cash, handing it to a corrupt banker who wires it to an island account. That is a movie. The real process is methodical, invisible, and it happens inside systems designed to stop exactly this. It has 3 stages. Stage 1, placement. Dirty cash needs to enter the financial system. In the United States, any cash transaction over $10,000 must be reported to the government. So criminal networks do not deposit $10,000. They deposit $9,800, then $9,600, then $9,400, across dozens of accounts, across multiple branches, on the same day. This is called structuring. It is a federal crime. And it is exactly what was happening inside TD Bank for years. Stage 2, layering. Once the money is in the system, it moves, account to account, wire transfer to wire transfer, shell company to shell company. Each layer makes the origin harder to trace. Finally, stage 3, integration. Finally, the money reappears as a business payment, a real estate transaction, a wire from an overseas partner. By this point, it looks completely legitimate, and tracing it back to a drug cartel is nearly impossible. This is the system that was supposed to be stopped, and TD Bank, for over a decade, chose not to stop it. Federal prosecutors identified 3 separate criminal networks using TD Bank as their laundromat. Network 1, the Dai Ying Si organization, a Chinese underground banking network operating out of New York and New Jersey. Between 2016 and 2021, they deposited over $470 million in cash into TD Bank accounts. To do this, they went directly to the source. They recruited TD Bank employees. At least 5 employees were bribed. The total bribe amount, $57,000 in gift cards. Think about that. For $57,000 in gift cards, $500 million of drug money entered the United States financial system. Clean. Network 2, the Fentanyl network. This network was directly connected to fentanyl trafficking operations across the eastern United States. Fentanyl killed over 70,000 Americans in 2023 alone. The money from that trade moved through TD Bank accounts, deposited, transferred, cleaned. Network 3, the Colombian Cartel network. The third network linked to Colombian drug trafficking organizations. Millions moved through TD Bank, wired internationally, back into cartel-controlled hands. 3 networks, different origins, different drugs, one bank, and one thing in common: the system that was supposed to catch them was switched off. Here is the number that federal prosecutors entered into the court record. The total value of suspicious transactions that passed through TD Bank's system during the investigation window: $37.3 billion. Not 37 million, not 370 million. $37.3 billion, flagged by the system and ignored. Why? Because TD Bank had classified its compliance department as a cost center, not a safeguard, not a legal obligation, a cost, a burden on profit margins. One internal email entered into court records: "We want to be the most convenient bank." Convenient for customers, convenient for cartels. Now I need to explain the system that TD Bank broke, because this is the same system that is running on your account right now. Under the Bank Secrecy Act, every United States bank is legally required to do 3 things. 1. Know your customer. Every account holder verified, identity confirmed, source of funds documented. 2. Monitor all transactions continuously. Every deposit, every transfer, every withdrawal, automatically analyzed, looking for suspicious patterns. And remember, we will come back to what suspicious means for you personally. 3. File suspicious activity reports. When something does not add up, the bank must report it to FinCEN, the Financial Crimes Enforcement Network. FinCEN receives over 3 million suspicious activity reports per year. 3 million flags across the United States financial system every year. This is not a system that is sleeping. This is a system that is constantly running on every account, including yours. TD Bank's version of this system was broken. What came after is far more powerful and far more aggressive. October 10th, 2024. $1.8 billion to the Department of Justice, $1.3 billion to FinCEN, $450 million to the Office of the Comptroller of the Currency, $3.09 billion total, the largest Bank Secrecy Act penalty in history. But the fine was not the real punishment. The Department of Justice imposed an asset cap. TD Bank's United States retail operations cannot grow until full compliance is demonstrated. For a bank that had spent a decade aggressively expanding across America, this was existential. TD Bank's stock collapsed. Its United States chief executive stepped down, and every major bank in the country received a message from the government. Not a suggestion, a message. Fix your system, or you are next. And they did fix it. But fixing it meant one thing: watching harder, watching everyone, including Marcus, including you. Within months of the TD Bank verdict, regulators sent a clear message to the industry. Passive compliance is no longer acceptable. Manual review is no longer a defense. We did not catch it will not protect you. And the banking industry responded the only way a trillion-dollar industry knows how. They spent money. Billions of dollars, industry-wide, poured into a new generation of AI-powered transaction monitoring systems. Systems that do not just flag individual transactions. Systems that build a model of you. Your deposit rhythm, your spending patterns, your typical transaction size, your geographic behavior, who sends you money, who you send money to. Every data point fed into machine learning models, generating what is called a risk score. A single number attached to your account, updated continuously, invisible to you. That number determines how closely you are being watched. And when it crosses a threshold, what happened to Marcus can happen to you. Let us make this real. Right now, regardless of which bank you use, your account has a risk profile attached to it. You have never seen it. You were never told it exists. You cannot request it. But it is there. And here is exactly how it works. When you open a bank account, the system runs an initial check, identity verification, credit check, watch list screening. This sets your baseline risk score. From that point forward, every transaction you make is measured against your established pattern. If you deposit $2,000 every 2 weeks, the system knows you. You look like a salaried employee, low risk. But the moment you deviate from your pattern, the algorithm notices. A large cash deposit, score goes up. Multiple transactions just under $10,000 in the same week, score spikes. That is a structuring flag. Sudden wire transfer to an account you have never sent to before, flag. Receiving money from someone whose account has its own flags, your score rises, even though you did nothing wrong. This is what Marcus did not know. The $31,000 in his account, it came from multiple clients. Different payment amounts, different timing, some in cash deposits. To him, it was 3 years of contract work. To the algorithm, it was a pattern that crossed a threshold. His score went up. His account was reviewed. And on a Tuesday morning, he woke up to 0.
So what exactly is the AI looking for? Let me walk you through the major triggers, not as a list, but as situations. Because these are not abstract rules. They are things that happen to real people. Trigger 1. Structuring.
Let us say you are a freelancer. You invoice 3 clients. They each pay you $9,200, $9,500, $8,800, all in the same week. To you, a normal week. To the algorithm, 3 deposits, all just under $10,000, all within days of each other. That is a structuring flag, even though you did nothing wrong. Trigger 2, rapid fund movement. Your client pays you $20,000. You immediately pay your suppliers $18,000 out. Money comes in, money immediately goes out. To the algorithm, that is a layering pattern. Same logic that cartels use. Same flag for you. Trigger 3, profile inconsistency. You have earned $3,000 a month for 2 years. Your uncle dies and leaves you $80,000. The algorithm sees 2 years of consistent low deposits, then suddenly $80,000 in one transfer. Flagged. Your account goes into review. Trigger 4, contaminated counterparty. You sell something on a marketplace. The buyer pays you $3,500. What you do not know, that buyer's account is already flagged for suspicious activity. Now their flag transfers a portion of risk to you. You did nothing. You did not know. It does not matter. Trigger 5, geographic anomaly. You travel for a month. You use ATMs in different cities. You make purchases in locations you have never transacted in before. Algorithm sees unusual geographic behavior. Score adjusts. Trigger 6, cash-intensive behavior. You run a small business, a food stall, a salon, a market shop. You deposit cash frequently, different amounts, different days. This is how you operate. To the system, this matches the deposit profile of money laundering operations. Flagged. Trigger 7, dormant account activity. An account that has been quiet for 6 months suddenly receives a large deposit. Classic money laundering pattern. Also sometimes just your annual bonus. The algorithm does not ask which. Marcus Chen got his account back. On day 11, after filing a formal complaint, contacting the Consumer Financial Protection Bureau and threatening legal action, the freeze was lifted. No explanation was given, no apology, no compensation for 11 days of financial paralysis. The bank simply restored access. Marcus was lucky. Some people wait months. Some never recover the funds. Some lose their businesses while the algorithm reviews them. And here is the part that should make you stop. The same bank that froze Marcus's account over a pattern had let $37.3 billion of actual criminal money pass through its system for years. The criminals walked. The executives walked. And Marcus, a contractor from New Jersey, spent 11 days unable to feed his family. That is the system. And now you know how it works. TD Bank paid $3 billion. The cartels found other banks. The fentanyl kept flowing. The executives kept their freedom. And the system that failed was rebuilt. Faster, smarter, less forgiving. It is running right now on your account. The question is no longer, is the bank watching me? The question is, what happens when it gets it wrong? What are your rights? What do you do in the first 24 hours? How do you fight back? That is the next video. Subscribe to Money Mechanics, because this is the system. And now you see it.